Welcome to the Startup Grind.
One of the things young companies think about the most, because it's an existential topic, is fundraising. How do you think about
good thing to think about.
Yeah, it's useful. How do you think about the topic in terms of how much capital to raise, how to think about from whom do you raise capital?
Yeah, so when raising money, in a lot of things you do in the company, you want to view it through the lens of what happens when things go wrong, as opposed to what happens when things go right. And to give you like a simpler example, like if you hire an executive and you go, well, when we're like Facebook scale and have 1 billion users, and this person will be really valuable, like that's a really dumb way to think about it. Because if you get to Facebook scale, like anybody's going to succeed at that job. The question is like, if the wheels come off and like you need somebody to like help you like get out of like dire trouble, like is this person that person? And that tends to be a better lens, because that's when you like really need people to be great when like things are hard. And that's the same with money. Capital markets swing around a tremendous amount. Like the public markets, the multiples in the public markets change by an order of magnitude routinely. And the private markets are worse. So you may be worth, on your numbers, $500 million today and $20 million tomorrow. And like that's not like crazy times. That's like regular times. And you know, I raised money at $700 million pre-money valuation in June of 2000. And by December of 2000, when I had tripled my bookings rate, I couldn't raise money at all. Like not at all. I had to go public to raise money because the private markets were completely shut. And so like that's the fundraising environment, and you just have to deal with the fact that that's the way it goes. And so when you raise money, you want to raise money with the thought, like, what happens if the capital markets get way worse on my next round? And that's how you should think about both the amount and the funder, because the very best funders are the ones who can see through troubles in external circumstances, who can see through other venture capitalists not liking the deal, even though it's a good deal, and can think for themselves. And that's extremely valuable in that scenario. Now, like, if everything goes well and the capital markets stay up, it might not even matter who your investor is. But when things go badly, it can matter a lot. And it's hard to find, because my favorite joke is, what do you get when you cross a herd of sheep with a herd of lemmings? A venture capitalist. And so it's hard to find one that thinks for themselves.
That one didn't go down as well as your other jokes.
Yeah, sorry.
But you're like
it's
9
funny.
It's
for 10. My favorite joke. I can't believe you guys didn't like
Can't
that.
you give him a sympathy
Herd of
laugh?
sheep and a herd of lemmings.